Hi, this is Will Cook of the Will Cook Group at Keller Williams Luxury Homes. Welcome back to my video blog. Today we're going to talk about what's going on in our local market, and I'm going to provide you with a fall market update. Record low inventory and record high sales are the two conditions that are causing every Valley city to experience record high prices. In this first slide, you will see that the median price of a detached home in the Coachella Valley in September was $585,000. That's up 14.7% over last year's value. The median price for attached homes in the valley also rose 23% to $375,000. A year ago, that price was $305,000. Attached homes have been filling the supply void for detached homes because of their lower price points. Prices are just beginning to show the seasonal slowdown that usually occurs during the late summer. In this next slide, you will see that as of October 1st, total inventory in the valley was 883 units, which compares to 1,959 units a year ago. Again, this diminished inventory number continues to be the overall force that is driving home prices higher. It will be interesting to see if the valley inventory maintains the seasonal pattern of rising from October to March, and if so, how much it rises. Every city in the valley has shown year-over-year price gains for detached homes over 20%. The city with the largest price change is Indian Wells at 42.8%, followed by Indio at 32.2% and Palm Springs at 29.7%. Every city in the valley except for Rancho Mirage has now exceeded the price highs that were made in 2006. In the attached home market price changes, Indian Wells also has the lead at 32.2%, followed by La Quinta at 30.1%. The relative size between the blue and orange bars in the graph on this next slide continues to tell the true story that demand continues to far exceed supply. The months of sales ratio in all price brackets under $900,000 is again less than 1 month. The lowest ratio of 0.4% or less than 2 weeks is in homes priced between $300,000 and $400,000. For homes priced over $1 million, the ratio is 1.4 months. Again, a new historic low for this price bracket. On October 1st, 8 cities had months of sales ratios that were less than 1 month. Only Desert Hot Springs has a ratio higher than last year. The incredibly low ratio in Palm Springs and Rancho Mirage are very impressive, given the fact that these are two very high-priced cities that are entitled to much higher ratios. The median value for the months of sales ratio throughout the valley on October 1st was 0.8 of a month compared to 2.5 months last year. It is because of these low ratios, which measure the balance of supply and demand, that we are not worried about any significant price decline or pullback after last year's price surge. Demand still far exceeds supply. The median value of days in the market throughout the valley is now 25 days compared to 57 days a year ago. As demand continues to exceed supply, the average time period to sell a home continues to decline. Selling times should stay near current levels while supply and demand slowly return to more normal levels in the coming months. In this next slide, the 3-month average of total sales, which shows both the seasonality and shorter-term sales trends, are rapidly slowing compared to a year ago numbers, but are still higher than sales norms of the past 5 years. Average total sales of the last 3 months have been 860 a month, which is less than the 1,077 units a month a year ago. However, it is still above the September sales numbers of the previous 3 pre-pandemic years. Mortgage rates jumped across all loan types due to the 10-year Treasury yield reaching its highest point since June. You will see that the rates are moving up and have now gone just over 3%. Freddie Mac forecasts that mortgage rates will continue to rise through the end of next year to an average of 3.4% in the fourth quarter of 2021, rising to 3.7% in the fourth quarter of 2022. So what does all of this mean for buyers and sellers? Well, for buyers, interest rates continue to be historically favorable. And market experts are predicting that home price appreciation will continue to the tune of an average of 5 to 7% in the next year. So in terms of affordability, there may be a cost to waiting to get into the market. If you're a seller, projections are that we will continue to be in a strong seller's market throughout the remainder of the year. However, increased interest rates may diminish the buyer pool in terms of affordability, and increased competition may occur as more and more sellers follow our normal trend of listing their homes throughout the fall and into the winter. So now may be the best time for you to put your home on the market to get the highest price. If you have any questions about the value of your home, or if you'd like to explore purchasing a home in the greater Palm Springs area, we'd love to talk to you about your unique situation. Please feel free to reach out, give us a call, text, or an email, and we'd be happy to talk to you. Also, if you have any other real estate related topics or questions that we can answer, feel free to reach out with those as well. Don't forget to follow us on Instagram @WillCookGroup or on Facebook or LinkedIn. Thank you so much for watching. See you next time.